Ladies and gentlemen, Christopher Aaron here. It is early in the morning of August 23rd, 2018, and I do thank you for being here. The difference between myself and some of the other people who are in the precious metals industry is that I do not have any precious metals to sell you. And so that gives me an ability to speak with a lack of bias, sometimes higher, sometimes lower, about the trajectories of the metals, which direction I think the metals are going to be moving in. And I think as we get into this throughout time, you will begin to see some of the benefits of this system, especially if you're heavily invested in this sector or you intend to be. It's one data point, so we're looking at the gold to silver ratio this week, and I'm able to speak about this in a way that some other people might not be so comfortable speaking about. So we are looking at the prices, the spot prices of gold here, coming into $1,190 for the close on the 22nd on Wednesday. And the reason why we look at this from the short-term time frame like this, of course, green being today, Wednesday, the red being Tuesday, and the blue color being Monday. The reason why we do this is because we are looking for little divergences. So you can see here with the price of gold, notice how gold did not close below the low from Monday today, whereas when we switch over to silver, we see that it did. So this is one of those little things. We're seeing a weakening in the gold to silver ratio at this point. This is one of those little things that if you study the precious metals for long enough and you really want to learn how these signals work, this is one of these things to be monitoring day in, day out, week in, week out, because you'll see it'll be useful for your own timing as we go forward here and looking to buy at better times or sell at better times. So this is really useful stuff. So let's look at how this works out throughout time and what can I tell you about this that some other people in this industry will not be willing to tell you, because we all have our own interest. My interest is as a private investor, so I just publish the information that is most useful to me as a private investor looking to make money both on the way up and on the way down if we're going to have that. So we're looking at the gold to silver ratio on the top. We were talking about that, the relationship between gold and silver. This is the number of ounces of silver required to purchase 1 ounce of gold from 2002 through the present. We're looking at a 15-year time scale. Right below the price of gold over the same time scale, and right below that the price of silver. Same time scale, 2002 through the present. What can we notice? This multi-decade resistance zone in the gold to silver ratio in this region between 80 and 84. Can you see this? 1, 2, 3, 4 times that this zone has been hit in the last 15 years. So you have to be really careful right now who you are listening to, what sort of reasoning you are listening to, because this is a major signal in the precious metals market. You could see why. If we look back in history, other times where this ratio has touched this zone, this multi-decade resistance zone, look at how good, all things considered, times like this have been to buy both gold and silver. Look at how the peak in the ratio corresponded with the lows in the metals quite accurately. This most recent time, not quite at the low this time for gold, but pretty close for silver. And so there is a school of thought that's saying, well, here we are now once again between the 80 and the 84 region. So therefore, aren't we setting up again for a very, very important low? In other words, a good buying time. This is the analysis that I see out there. And I have question marks up here because I do have questions about this. And I've begun to ask recently, and I want to look back at history, what else do we have to judge? But I want to look back at history and I want to see, has this sort of thing happened? Has this happened in the past when the majority of precious metals investors have believed that because we were getting close to this resistance zone here, that therefore this was a sure bet, a slam dunk. This is the time to buy. Okay, so this is the question. It's a question. let's look at an example from history. We don't have that much data to look at for the precious metals because they've only been trading freely since 1971. It's not like we can go back to the year 1900 or 1950 and look at the price of gold because it was fixed by the government. So we can only look at this period after 1970, 71, when Nixon closed the gold window. And we can look at these periods, these other periods. So this takes us from 70 through the peak in the gold to silver ratio, through the trough in the gold to silver ratio, down here near 17 as the price of gold and silver spiked into the bubble in 1980. And come on, let's admit it was a short-term bubble, even for silver, right? We could see that. It collapsed after that. So that was the low here corresponding with the peaks. And we see once again what happened here was this multi-decade resistance zone, different levels. We're talking between 40 and roughly 47 on the ratio. And we can see the number of times where peaks in this ratio, once again, corresponded with fairly good buying opportunities, right? At least intermediate term. Look at how the low corresponds almost exactly with this high in this range. And so the school of thought at that time, we're talking 1985, it was similar to it is today. There were people coming out and saying, well, the gold to silver ratio has never been higher than this. This is the resistance zone right here. We're once again in that resistance zone. So shouldn't we be buying the heck out of gold and silver? That was the theory, very similar to what we're seeing today. And keep in mind, this is almost a 15-year chart as well. So we're looking at this multi-decade resistance zone here. So that was the theory, right? We're seeing this all over the place right now. Literally, articles are coming out every other day talking about the gold to silver ratio and that this means that the prices must be putting in an important bottom. Let's fast forward the chart. What happened here? Wow, it really blew some people away. This level here in the upper 40s, which previously matched these highs, did not hold it back once we got into the 1980s, and the gold to silver ratio actually more than doubled from the previous resistance zone. You can see this, more than doubled. Okay, as what happened to the prices of the metals, they fell for almost another 20 years, 20 years in the case of silver, and the final bottom in gold being about 16 years later. So silver lagged a little bit. But still, the point is, so we saw this, the belief that we were getting into a multi-decade resistance zone here, therefore the metals have to skyrocket or they have to be putting in an important bottom. It was not true right here. The market can do some radically different things than most people expect. We have to look for the signals on this on the actual charts. So we bring it back to the present, and we're seeing that exact same setup right now. So I would just say, wow, if you're heavily invested in the metals, this is something you need to follow pretty regularly to know for yourself. Are we dealing with an important low setting up? Or could this be another example like that example from 1985 where the gold to silver ratio fools everyone and actually keeps moving higher? Can we imagine that if it moved higher above 84, 85, where it's getting close to right now, and kept moving higher? So if you're not watching this, I'm just saying, boy, these things happen in history. And look, if there's anyone who would like the precious metals to move higher, it's me from a personal basis. Why? Because I'm invested in the metals and I know people that are. And I also think my business will do better if the metals are moving higher. But over the short run, I'm aligning my business to try to show people what is actually happening here, which is not always that the metals are going to move higher. There is this precedent. If this ratio does not start coming back down, this thing could move a lot higher than it already is. So just be careful who you're listening to right now. That is why I publish this premium service, and these are snippets of that you see here on this YouTube channel. I do care about the precious metals investors. I am one. I understand the philosophy. We are seeing a lot of the things in the background that very much are happening in the world that are just rotten. You know, the printing of money, the waste of resources, the wars, the endless wars, the bailing out of banks, and all those shenanigans. I see those same things too. But I've also seen with my own eyes that the markets can move opposite to what the perceived fundamentals can be, or there's something else happening that maybe we are not aware of in the background. You know, something else is going on. There's another cross current. For us to be so simplistic and assume that the markets only move with one current, like the waves, that they only move in one direction. We know that the waves move, they crisscross, and sometimes the tide is pulling out, and sometimes it's pulling in. And there's all this mixture happening there. So I think the same thing is happening right now with the precious metals and the broader economy. There is corruption. There's a lot of crazy stuff happening out there. But there are also genuinely good things happening in the world. So I suggest that we stay open to those things collectively, even as we pay attention to what's happening in the precious metals. You can find more about this, the premium service, on the website. I also work with individuals. If you would like to speak to me one-on-one, you could do so by clicking on the consultations tab on the website. I simply look out for the best interest of my clients. This weekend, we will have, in this very same format of this video, it will be a 1-hour special video. We do this at the end of every month. This format, but a lot more in-depth. We'll look at gold and silver themselves, updates the short term of the gold to silver ratio. We'll look at the US dollar and the bond market and put everything together for where we are at this point. So I thank you very much for tuning in. Again, so the idea that I'm formulating here is that there are cross currents. There are waves coming in and there are waves coming out. And these impact the precious metals as well as the other sectors of the economy. So I just think it's important that we pay attention to as much as we can and formulate a net sum of what is happening here. Thank you.